We are, of course, hosting this session within the first PRISM conference to honor the legacy of the beloved Dr. Pritam Singh. Mr. Mohanty, just in the previous session, which Dr. Asha was chairing, described him wonderfully as an ancient saint in modern time. So my first warm-up cardio question to all the panelists is as follows. In your understanding and experience, gentlemen, what is the single biggest consequence of the pandemic on the banking industry? Now, of course, there's been a lot of suffering in the past 2 years, loss of life and among other things. And I dare to ask a bonus question: is there a silver lining at all for the banking industry out of this chaos? Let me start alphabet-wise surname. Mr. Jayakumar, what are your thoughts?
First, let me thank you very much for inviting me to join today's discussion. I think the pandemic, one hopes, is a once in a kind of lifetime event. Today, Bill Gates is saying that the death from future pandemics would be just as what it would be with flu. So let's hope it that way. But nonetheless, the pandemic, I think if it has done any big, if I were to pick up one significant way to express this, is that it pushed a change in the business models for the bank by bringing in a number of items. For instance, increased volatility, whether it is in the capital market or is it with the corporate customer or even the repayment behavior of the retail customer. And therefore, how do you approach and how do you deal with this volatility is probably one of the most important questions to answer. And so if you were to look at the retail consumers, the ability to deal with distress situation, enabling them to restructure the facility, helping them to go with real relocation so they can look for new jobs and opportunities, allowing them to take advantage of new government programs that have been introduced across the world are some of the factors that one might consider. The second is that while directionally we were moving to a digitized banking, the pandemic has fast forwarded or turbocharged digitization. And this rapid turbocharge is also because of an adoption and acceptance by the consumer, maybe under forced circumstances of accepting the digital system, as also a significant investment by the Reserve Bank of India and the Government of India in building one of the most vibrant payment systems that exists in the world in India. The third thing, I think...
Sorry to interrupt you, Mr. Jayakumar. We are unable to see you. Your video is switched off.
The reason I do that is with the video on, the bandwidth tends to be a challenge. So let me come towards the end with the video. That's really a technical thing.
Sure. Please go ahead.
The third thing I think is the extreme importance of business continuity plans. And so we're going to see a lot of robust process on the digitization using bots, robotics, AI, and also the need to embrace cloud technology as a way of providing greater resilience with data center management, etc. And also building a lot of work around remote access and management policies, including fortifying the endpoint protection as third-party dependencies have increased. The fourth thing I see is a need for a much stronger balance sheet, if any, that this pandemic has thrown, the uncertainty, the volatility, the higher credit losses, etc. And so this is going to result in a number of players becoming partners and civics in supporting the banks. And therefore, the concept of securitization and its derivative would further get enhanced. Then I come back to the next item, which is HR practices. The ability to reskilling people is now more important than before. Working from home, learning how to communicate, how to train, how to performance measure, and also how to provide support system for employees as they work more independently alone. And the last point is that the pandemic has shown that Earth can regenerate itself, provided mankind does not pollute. The role of sustainability as a part of business and part of banking will dramatically increase. So in summary, I would say, it is really a change that has been happening in the business model of banks. Part of it might have happened in usual course, and part of it is turbocharged by the pandemic and the events that are there. So those broadly are what I would summarize as some of the key outcomes as a consequence of pandemic, insofar as it affects the banking system.
Thank you very much for those set of reflections, Mr. Jayakumar. I'm going to move to Mr. Mehta now. Same question. Single biggest consequence of the pandemic on the banking industry, and is there a silver lining? Over to you, sir.
I think my dear friend and colleague, Jayakumar, has sort of articulated very well many attributes which will sort of change the face of banking. pursuant to the pandemic. And I'm going to actually delve into something as a practical experience for the benefit of all your participants. The pandemic has actually shown that if we are all resolved to deal with the most complex issues, we can have very positive outcomes of even a challenge like the pandemic. And I specifically state this, that as you're well aware, that the Reserve Bank of India and the Government of India had issued the notification for the reconstruction of Yes Bank, which was in the most difficult situation in March of 2020. Our first board meeting post the moratorium was scheduled for March 26, 2020. And that was the very day that the lockdown started. So to tell you truthfully, regardless of the pandemic, you can reconstruct the bank in 18 months during the pandemic, while on a virtual basis without shaking hands with your board colleagues, a new board that was formed in March of 2020, and come out stronger with paying back what was due to the Reserve Bank of India, 50,000 crore that we had to pay back to the RBI, have a solid bank now. And this really sort of demonstrated that when you are hit with an adversity, you start thinking out of the box across all parameters of the financial architecture. And be it dealing with the aspects relating to technology, because we were all sort of virtually connected, be it the business continuity, the aspects relating to the confidence in the system itself, because you had a huge problem in terms of the impact on the economy. So we had the issue of how do you sort of provide confidence in a bank which was already sullied and get that bank into order. The employees were facing personally very severe issues, both in the COVID-1 and COVID-2. And it was almost dealing with issues that you did not know as to what would sort of impact them personally or professionally. And yet, in a complex situation like that, to be able to sort of get the best out of them and commit and get their commitment to be able to salvage this institution is again a demonstration that you can overcome anything and in any kind of an adversity if you have the resolve and the support and the confidence of the system itself. We had the issue about our credit situation. We had an internal, what we had inherited as legacy issues, and then of course an external situation. But if you do things properly and you develop the right kind of processes, systems, risk architecture, you can deal with that aspect as well. And then of course the aspect of moving towards growth, using what is the whole aspect of digital banking, technology far more effectively, much more contemporary systems and processes. And I think that's the whole aspect of how you can come together and work your way through a pandemic. So there are many learnings from this. And I think there can't be any better way than when you go through this on a personal basis, professionally, in a very difficult situation, and come out of that stronger with a better resolve that should, and I hope this never happens again, but should this situation be there, from a risk perspective, what I call, there were earlier the aspect of known unknowns, but now we have to deal with unknown unknowns. How do we prepare for unknown unknowns in the new global financial markets? I think this is one of the key aspects that I would sort of leave on the table as bankers that we will need to sort of work and build on, so that if we ever face these kind of shocks, our risk processes should be strong enough to deal with this aspect as well. I'll stop here.
Thank you very much, Mr. Mehta. I'll move to our third speaker, Mr. Rai, with the same question. What has been, in your opinion, the single biggest impact of the pandemic on the banking industry? Is there a silver lining? Over to you, sir.
Yeah, very good afternoon to everyone. I think Mr. Jayakumar and Mr. Sunil Mehta covered most of the relevant aspects which hit the banking industry at that point of time and how we came out of this situation. So one thing which comes to my mind when we look at this pandemic, the first time in our lifetime, we saw something like this. The earlier problems we faced was because of economic cycles and disruptions and like things which were mostly man-made, like because of the interconnectedness of the economies and those kind of issues. So we were specializing in handling those kind of problems. The whole risk management was built around this kind of issues. Nobody had anticipated a pandemic of this sort will come and we have to close down offices and people have to work from home. I think we were not prepared for this kind of pandemic. But then credit goes to the system that the resilience of the banking system came out very strongly during this period. I think today we have come out of this pandemic period with much stronger balance sheets. And it was anticipated that the NPAs will double, the capital requirements will double. You know, there are a lot of estimates going around. But if you are looking at the latest balance sheets coming from the financial system, be it NBFCs, the private sector bank or public sector banks, they're coming out much stronger. So why this happened? One was the regulatory requirements of business continuity plans, which were there in every bank, embedded in our policies. And when the epidemic hit, actually these become activated very quickly. Particularly, you know, how to manage a treasury, having alternate officers, setting up teams at various places. We have moved the teams to different parts of the country so that if one state goes down, the team can work from some other state. You know, to that extent, actually, the arrangements were made. The continuity plan worked very well. So I think the planning was great. And the resilience of the system, because one advantage for us, we entered the pandemic with a much stronger, cleaner balance sheets. So most of the cleaning of the balance sheets had happened already. So when we entered the pandemic period, the balance sheets were quite strong. And then the credit goes to the customers also. So despite pandemic, the way they came back. Now, if you're looking at the latest collection efficiencies, every banker listening to me will watch by what I'm saying. The collection efficiencies have come back to almost normal. So now this also credit goes to the customer, because again, the credit goes to the digitization, because every customer's repayment data gets recorded and his credit history gets created. Nobody wants to default. If they're capable of paying, somehow they will manage to pay and keep their credit history clean. I think maybe that has helped us to improve the collection efficiency. But the banking system itself has evolved very well to match these difficult situation, and we have come out much better. I would not like to touch on digitization again because Mr. Jayakumar has touched about it very in a detailed way. But that is one of the greatest byproducts of this pandemic. And just to you, we could touch 32 crore people at different villages through our branch network and the business correspondents, delivering them the money with the government credited their accounts. That itself speaks of the digital deepening which has happened in the system and the reach of the banking system and the interconnectedness of the ecosystem which is built based on the technology. So these are certain great achievements which has proven to the world the capabilities built by our systems, pushed by the government, regulator, active participation from the various players in the banking system. And today we are able to achieve all these. So personally, for me, we were going through amalgamation. Yeah, like Mr. Mehta said, I'm aware what they went through during this pandemic period, and they came out with flying colors. Similarly, we were amalgamating 2 banks with us, and again a pandemic period. And you know that this went on very, very smoothly without any disturbance to staff or customers, despite the pandemic's presence. And again, this goes back to prove that our banking system has evolved. We are very, very resilient system. But yes, we need to prepare our operational risk management for this kind of events. Just because we came out of this with a much better, with much better shape, doesn't mean that the next operational risk which can hit us will be same. So I think we need to prepare better. So I think maybe this kind of discussions will definitely help us to understand each other's perspective and evolve much better models. Thank you.
Thank you. Thank you very much, Mr. Rai. I'm going to move to our 4th and the last panelist for his first set of reflections on the same question, impact of the pandemic on the banking industry, and do you see a silver lining in that? Professor Yoshino, over to you.
Okay, thank you very much for inviting me from Tokyo. I was the Dean and CEO of ADB Institute until 2020, from 2014. So I visited India until January 2020. And I have been visited many cities of India. I would like to make 5 points about COVID-19 and banking business. And I would like to talk about from Asian perspectives, not only focusing on India, but also other parts of Asia. First one is lots of government support has been introduced to bank loans and banking business. Especially credit guarantee has been implemented in many parts of Asia. That has good impact and also risky impact. Credit guarantee, the banks can lend money very easily. And because in default losses has been covered by the government. So some of the loans are borrowers are temporarily affected by COVID-19. They are good borrowers. And another borrowers are structural problem, but they can keep on borrowing money by using credit guarantee. So I think the risk of the banks is they have to differentiate 2 kinds of groups: temporarily affected liquidity problem, and another one is structure. And structural problem borrowers has to change their business patterns. So loans has to be used to other purposes rather than for liquidity. That is one. And second one is the easy monetary policy and lowered interest rate. So the borrowers are very easy to borrow money. Then banks have started to expand their loans. Especially in many Asian countries, politicians asked banks, don't hesitate to make loans to customers because they are suffered by COVID-19. However, as I said, structural problem borrowers has to change their business patterns and so on. And another point in Asia is deposits are usually guaranteed by deposit insurance. So it is not so easy to finance risky sectors, startup businesses, small businesses. Then banks are avoiding risks and then continuing support borrowers. So in some part of Asia, banks are handling not only deposits, but also investment trusts or trust account. So that means banks has 2 channels to provide loans. One is safer loans, and another one is investment trust, where the guarantee is not applied. So I think that kind of mixture of the banking business can develop. If it were developed in India, then lots of green light can be shown to banking business. Thank you very much.
Thank you very much for those incisive and focused 5 points, Professor Yoshino. We are right on time, just to let everyone know. And I want to congratulate everyone. We have unlocked the second segment of our discussion. We have sufficiently warmed up. Now I'm going to deep dive into some of the things that I've selected based on the introductory remarks, particularly the issues of stronger balance sheets and need for it post-pandemic. We heard Mr. Mehta talk about reconstruction process, how they got it right, the importance of right kind of processes. Mr. Rai talked about the resilience of the banking system, although NPAs were expected to rise, but the system did work at the end. But there's a need to mitigate operational risks in the process. And Professor Yoshino, towards the end, touched on structural problems and this a need to find good borrowers. Now, I want to touch on these topics in my next segment. And I want to talk about the National Asset Reconstruction Company of India, NARCL, which has now been established. So very quickly for our audience, particularly students who've joined, the 12 public sector banks, 4 private lenders in India have agreed to invest in an asset construction company called by the media as the bad bank. It should not be called as a bad bank. The idea is to clean up balance sheets with the help of the central government. NARCL follows a twin structure. The trustee part is where the stressed assets sit, and there's a separate India Debt Resolution Company, IDRCL. That's where recovery and turnaround of these assets will happen, hopefully. Now, one participants, this is a nudge for you. If you have any thoughts on the India's NPA crisis, if you have thoughts on this bad bank, please let us know in the chat window. It could be a comment, it could be a question. With that, I'm now going to invite Mr. Rai. Mr. Rai has played a monumental role in NARCL. Mr. Rai, some say that if we allow banks to fail, then depositors, particularly in an Indian context, who operated under the presumption that India's regulatory framework would protect their money, that would be undermined. While simultaneously, it may deal a heavy blow to the government's already crunched finances. I'm playing the devil's advocate here. Now, as someone who's been at the front and center of this landmark initiative that is making a lot of people very hopeful, but also very curious, where do you think we currently stand, Mr. Rai? Your 5 minutes, please.
Yeah, thank you. Since you mentioned the bank's failure, see, one other point, actually, apart from NARCL, I would like to bring. We do not have a kind of social security systems which most of the developed countries have. People save their money during their life when they work, and generally the money is kept in banks as FDs, and that is their insurance for their retired life. So most of the deposits in the banking system are the savings of the people which they have preserved for their retirements and for the old age. So I think we need to keep that in mind when we talk of bank failures, because a lot of people when they work for developed economies, they tend to speak of banks being allowed to fail and all that. But then we have to keep these considerations because our country still has not reached that level. So I think somewhere we can't allow banks to fail because this will have much bigger damage. So just to supplement one of the points you just mentioned. Now coming back to NARCL, see, this is a beautiful concept which is coming out from certain international experiences, but again, very specific to our country, because our experience has been actually it engages a lot of management time in resolution of huge, like the bigger NPAs. And the many bank MDs have to get involved because the exposures are at multiple financial institutions. It's not only banks. Many we have seen actually even other intermediaries like insurance and mutual funds and many other players get involved, including individual depositors. So it's a very complicated process for resolution, getting consensus among various creditors. So and another thing what we observed in resolution, we lose value because like coming to consensus and these processes take a lot of time. Meanwhile, the assets lose value. And basically the value of any asset depends on the interest of the buyers. Okay, the asset may be valued 1,000 crores, but then for a buyer, he will look at how much money he can make out of it. Suppose he thinks he can invest 200 crores and that will be profitable, this thing. So the asset may be valued at 1,000 crores, but then you will not get a buyer for more than 200 crores. If the cash flow which can be generated from that asset cannot justify 1,000 crores investment. So the valuation and the investment which is coming from buyer are two different things. So we were losing heavily on many of these assets for small issues. So we were always thinking that how to create value and how to make these resolutions simpler. So that's why actually a lot of thinking has gone behind this. Very renowned bankers and thinkers have contributed to this concept, and ultimately government accepted, and it was a part of the budget speech of constitution of NARCL and IDRCL. So now we have made a lot of progress. Here actually the main thing which will happen is the debt aggregation. The process is identification of some accounts have already happened, and the banks, lead banks have called for the meetings, and the banks have agreed, and we have consensus among lenders for shifting it to NARCL. The inter-creditor agreements have been signed and it is all kept ready. Now the NARCL also, we have the license now, the board is also constituted. The SOPs are being drawn now. The NARCL will make an assessment along with IDRCL, that is the value they can offer for buying out these assets. And once the banks also agree, there will be a Swiss challenge so that the price discovery happens. So after that, the NARCL takes over at that agreed price. Again, you know, the structure is 15% cash of agreed price will be paid and 85% will be SRs backed by the government guarantee. So that is another new addition which has come in. So actually this ARC, if you are also factoring the government guarantee, is created with roughly about 36,000 crores of capital. Today, the second largest ARC next to this may not even have 10 to 15% of the capital what this company is working with. So with that kind of capital support, the NARCL can really acquire the large assets where there can be good value. So this is the idea with which it is created. And we have made good progress, and we are very hopeful. Shortly, the first offer for purchase of some of the assets will start. Meanwhile, IDRCL also it is already constituted. The board is also in place now. So like some of the SOPs and recruitment of the, because IDRCL is going to operate as a private sector entity. So the recruitment from the market for the right kind of people, resolution professionals, advisors, is all under process now. Once that is done, actually, I think this structure will start playing, and we are very hopeful that some of these assets which are getting shifted are definitely going to create much better value than what we have anticipated now. And the recent amendments done by the Reserve Bank of India on some of the dilutions of the earlier norms, like even the fraud account can be shifted, and that kind of things will further help this NARCL. And we are very confident that we'll be able to resolve some of these complicated and big assets, and which will add value. And we need to look at it as an institution being created. It's the first in our country. And when we talk of huge investments in infrastructure and going forward for a 5 trillion economy, you know, we have to lend very aggressively. So when we are lending aggressively, you can't rule out creation of, again, stressed assets. So we should have a better mechanism to handle stressed assets when that hits us in the future. So this kind of institutional mechanism which is being created now, hopefully going forward will help us to think better. Whenever we have a stressed asset problem, these kind of structures will come very handy. These learnings will come very handy, and we should be able to handle the 5 trillion economy much better than what we could handle in the last few years. So thank you.
Thank you. Thank you, Mr. Rai. That's the optimism that we really need. When you were speaking, I was reminded of the conversations when IBC started. And it appeared as if we were going to get a pretty high rate of recovery, which soon began to decline sharply for various different reasons. And another thing that I noticed was in your remarks that it does hold a lot of potential, although the precedent, the examples that we see, the existing 29 or 30 odd private asset reconstruction companies have not really had blockbuster success, as you rightly pointed out. So let me ask, let me bring in Mr. Jayakumar. Would you share Mr. Rai's optimism and the potential for this landmark initiative? Can it fix what is perhaps the world's most toxic pile of loans? Mr. Jayakumar.
See, one of the challenges we have had in the resolution of difficult stressed asset has been there are a number of banks who participate, who have lent to the money. Not everybody's interest is aligned. And the bank with the smallest exposure usually takes the most aggressive stand. As a consequence of which, the borrowers are able to play one bank against the other and extend the period on which the settlement would happen. The biggest advantage of this particular approach is that we bring a unity of thought because there is now only one person representing all the borrowers. And therefore, the negotiation could be in a better position of strength relative to what it has been before. And I think that would be one of the biggest advantages of this arrangement. We did have, agreements between banks and that would compel everybody to behave in the same manner, etc. But somehow they never fully work. Now, coming back to the issue relating to the settlement, you see, eventually we are dependent on the Indian legal system. And if the legal system is going to be stretched for one reason or the other, then the solutions get deferred. In fact, if you see the ease of doing business in India indicator, the biggest issue cited by foreigners is the ability to enforce contract in India. Any contract that is not enforced through a mechanism of court takes years to decide. So we need a significant reform in the judiciary process. And today there are lots of options available, but we need to see that moving. So what I think this institution would be able to do would be able to bring a common decision, a decision that would be made on behalf of all the lenders, because this institution is now the owner of the asset. There will be a clarity of thought and a clear line of action. And therefore decisions would be made faster, better. And that really is what I think would be the biggest advantage of this current arrangement.
But Mr. Jayakumar, thanks for that. And you rightly said that the incentives are not really aligned at the moment of all the participants. In that scenario, with that reality in mind, how do you think we can bring about a unity of thought? If the starting points are different, how do people get to the same spot?
If only one institution is making the decision, that institution makes a decision, isn't it? So that's how we're likely to get the unity of thought. So there is one decision maker, one company, one institution that brings the picture together very clearly. So I think that will be the bigger advantage. See, if every member in the board is going to have his own views enforced in the final decision, you're going to be in the same place as you are now.
That's right.
But that's not what envisaged. So actually, this whole arrangement, the discussion we've been having it for many number of years now. I remember Sunil Mehta used to head a panel of which I was a member, and we had recommended something similar, but that was was to be in a private space as opposed to be a government space.
Correct.
But now there is a collective arrangement to come together with the government blessings and with everybody else's support of the stakeholders. I think it will be far more effective as an institution.
Thank you. I'm actually going to
take time to resolve unless the court procedures are sorted out. This is not something within the control of the bank. If there is going to be 50 days time between one hearing and the other, and if each hearing can be postponed, then you still are going to have a 3-5 year timeline schedules. So we have a challenge in the enforcement of contract as a principal problem in this whole ease of business, etc., and we need to deal with that.
Right. Well, along with all the banks and bankers, I think practically every citizen is waiting for the Indian legal system to get its act together. So we are all hopeful that will happen soon. But I'm going to pick from where you left just a while back. And I'm going to move to Mr. Mehta now. Mr. Mehta, a lot of us learned from your tweet last month about the news of RBI giving NARCL a license to start operations. By the way, I want to remind very quickly our audience that what Mr. Jayakumar was also mentioning, Mr. Mehta led and Mr. Jayakumar was part of a very celebrated project called Project Sashakt, translates to High Force, High Potential, Professor Yoshino, which 3 years ago roughly recommended a 5-point plan to fight stressed assets. Now we are clearly seeing some of those ideas in action. So maybe Sashakt Karwai in some ways. So Mr. Mehta, the question is, what are your thoughts on where we stand at the moment? And going forward, what kind of pitfalls can we avoid?
Thank you. And I will try and restrict myself to 5 minutes because you hit a topic that is very dear to me, and I thought I would have sort of taken more time, but I'll respect 5 minutes. I think the whole aspect of stress assets in the system has been one of the most important elements in the banking system that has been bedeviling us, which sort of came to the fore when the Reserve Bank started this asset quality review of the banks, and we could not kick the can down the road, and we had to start recognizing. And the enormity of the problem started becoming more and more visible, from the large assets to mid-tier assets, and of course the small and medium enterprise assets. So when we set up this Sashakt committee, of course it was preceded by the IBC. We had at least a platform that we could go on. But when we were requested to come up with the recommendations on the reforms relating to stress assets, you're right, we had a 5-point agenda. But I'll sort of cover what we sort of tried to look at. One is that how do we deal with the inventory of stress assets that are already there and find a quick solution to how they can be dealt with. The second and more important piece, Professor, was how do we avoid this in the future? What are the elements that we need to look at from a risk process point of view, credit process, governance structures of the public sector banking system and the private sector banking system, which need to be institutionalized so that we do not have a repetition of this going forward. Third, we had also recommended an asset trading platform. That means that as you look at it from the point of view of creating a market, Rajkiran mentioned about the fact that if there's an asset which is valued at 1,000, but there's a buyer who's only willing to give 100, you have seen over the last few years how these buyers are gaming the system. There are really high quality assets which do not find a buyer because there's gaming going on. And I think we need to be careful about that as we sort of move this, because this is national assets, national treasure, which cannot be allowed to be gamed in the system. So we have to be very clear in terms of when we set up this structure and this national ARC, which has sort of now got a huge amount of assets sitting in there, how do we create the governance structures there so that this aspect of what assets are getting transferred at book value now or whatever is the perceived market value when there's a Swiss challenge to it, but you know the right of first refusal is still there with the national ARC. At what value will these eventually be sold? So how will the asset management company create more value in that? We also have a sunset clause in this. The government guarantee expires in 5 years. So we need to be mindful that we have a limited period to be able to deal with this. Lastly, we have a lot of activism, as you know, that in the market. We have, if you don't have the right transparency in the governance structures, which are completely seen as can withstand any decisions which Jayakumar alluded to, that you have one institution which is now taking the decisions. How can you avoid a look back into this going forward? You know, you can't be sort of asking questions 7 years from now that did you sell this asset at below market value? Could you have realized more? So we need to create that construct of there should not be a look back. You cannot hold any of these people who take decisions which are in good faith today, and you say that, no, perhaps there was some malafide. And as you've seen in the recent past, particularly over the last few weeks, some of these inappropriate tyrannical actions of the low courts or the police have sort of demonstrated that we cannot have this bedeviling or coming in the mind of people who are going to take decisions on all of this. So I think there needs to be a much deeper dive. I would say that these are all kind of steps in the right direction, but please be prepared to make rectifications as we move along, course corrections, how to make this institution stronger, how do you make it And let's not forget that if you have an 8 to 10% GDP growth as is projected going forward, we will have stress assets going down the way. I mean, we've got to be prepared. We cannot have, the NARCL has a limited finite life. So we need that 29 other ARCs or more as they come up. We need to create an ecosystem to have more of such these who are well capitalized, who have good quality people who are running these, supplemented with a judicial system which understands what it means in a stress asset situation. And you cannot have interested parties blocking the right decisions and taking undue advantage of our system to be able to come up with wrong outcomes. And lastly, I would say, focus on governance, focus on risk management, that as we move forward from here, we do not commit the same mistakes to create this large volume of stress assets as we are sort of now dealing with at this point of time.
Thank you, Mr. Mehta. I'm going to touch on governance in just a minute. Before I move to Professor Yoshino, I should give some time to Mr. Rai if you have any comments to what Mr. Mehta just said. Sir, would you like to respond to what he said?
Yeah, I fully appreciate. Actually, the credit goes to Mr. Sunil Mehta for this thought process. I mentioned during my when I detailed this, the intercreditor agreement itself was a concept brought in by Mr. Mehta, which has helped the system. Actually, even the regulator recognized it and it became a part of their directions now. So I think what he says is right. Actually, having right kind of governance, actually having a very credible board is very important, which we are trying to do actually with the help of the government.
Credible, fantastic point. I'm going to bring this up again, Mr. Rai, if you just hold on to that thought. Professor Yoshino has been listening to us very, very patiently. I want to step away from the situation in India and I want to get some international perspective, although Professor Yoshino has worked quite closely on the Indian markets as well. Professor, several economies are facing the problem of NPAs. I guess out of all the major economies, India has the dismal record of close to 10% NPAs, which is one of the highest in the world and 10 times that of Japan.
Yes.
So
thank you.
Are we really addressing the root cause of the banking turmoil and crisis with all these initiatives? What are your thoughts? Or is digital transformation the answer?
Yes, thank you very much. I was a policy board member of Japan Deposit Insurance Corporation for 15 years. And I have handled 180 bank failures after the burst of the bubble. And I had decided whether this bank goes into bankrupt or not. Then one bank was originated by North Korea. And I didn't know that. So I announced this bank should be closed immediately. Then next day, local police started to guard me. In the morning and afternoon, they visited me. Professor Yoshino, are you okay? So that was my experience. Then I'm coming to the revitalization company, which in Japan we call it RCC, India NRC. And it is very important to separate non-performing loans with good loans as quickly as possible. Otherwise, the banks cannot make healthy businesses. So that was the first experience. Then how about stress test? Japan did also the stress test, 5 categories. However, revitalization scheme is important for the borrowers. One example was bus company was very close to fail, but the management was very bad. Then we have to replace the management. Then the bus company became better. So the stress test often assumes the same condition will continue. But we have to think about at RCC, NRC, how to revitalize the corporations and borrowers. That is very important to reduce the cost of the discounted price. Then RCC becomes better. So I think revitalization is very important. And third one is transparency. How much capital or how much money has been injected in each case. And that has been kept as a record. And that is very important. Then the responsibility we can know. Last one is a discounted price. So bidding system has to be also transparent. And sometimes prices will become much lower because many people expect this company will not be vitalized. Then as an ex post, there was a case, the price was much, much lower compared to what we had expected because good revitalization was going on. So I think if as long as it is transparent and supply demand is oriented, we have to approve the price. Otherwise, the transaction and the dealing will not keep on going. So those are my experience based on Japan. Thank you.
Thank you very much. Thank you for sharing your experiences. That's very, very valuable for all of us. I'm going to take the point you mentioned about transparency, and I'm going to link it with governance now. Mr. Mehta, I'm going to come back to you since you touched on governance as a panelist first. An important piece of the puzzle, as you rightly said, is the issue of governance, which routinely comes up in different forms and manifestations, be it power of the government in a public sector bank, be it appointment of board, CEOs, compensation. There are so many instances. In fact, in the morning panel today, Mr. Gopalakrishnan, who's been with Tata Sons, said that the priorities of boards in India today have changed dramatically and for good. So you also, in your opening remarks, you talked about Yes Bank that has appropriately dealt with legacy issues around GRC. So at a fundamental level, Mr. Mehta, how does one create sufficiently effective and sustainable governance in our banking system that's future-proof? I'm trying to tie it with the title of our session. How to make the governance system future-proof?
Thank you. And thank you, Professor. This is absolutely the bedrock of the quality of the financial system that we can create going forward. And I think we have to be honest to ourselves and take a very hard look as to what has bedeviled our system, what needs to change, what are the changes required in our statutes. You know, if 50 years ago we had the Bank Nationalization Act and the State Bank of India Act, where there were decisions made in a very different time frame. And I think we just need to open up those statutes and take a relook that the world has changed in these 50 years. I would urge our legislators to take a close look and say, how do we create the right kind of a governance structure which empowers the board to govern the institution, taking into account all stakeholders? Because at that point of time, when the banks were nationalized, they were 100% owned by the government of India. There was one stakeholder. And there is one element in that statute, which is called that the government of India will take the final decision if it is in public interest. Now, you can sort of expand that in any which way to sort of deal with that situation. So I think we've got to understand that financial markets are basically based on two. One, of course, is the governance, and then the regulatory architecture becomes how we sort of deal with this. So again, in the public sector banking system, I applaud all the people who have got the public, who have made this public sector banking system work, even if they have their hands tied to their back. My admiration for people like Rajkiran and Dinesh Khara and all the others who are leading these large, my good friend Mallikarjun Rao, all of them who are leading these institutions are really dealing with it in a very complex, but we need to create a board structure that is truly empowered. Many of these banks don't even have, I don't know whether Rajkiran has a non-executive chairman today in his board. I mean, he says no. How can you run a board without having the right checks and balances of a non-executive chair? I'm quite sure when I left PNB in February 2020, there is still no board chair after. These are large institutions. And I think we've got to be cognizant of the fact that you cannot have an institution being run without somebody who's responsible for functioning of the board. So then this board needs to look at all the risk processes, needs to look at compliance, need to look at it. How is the bank today prepared to deal with the new technology? Technology could be talking about the whole fintechs taking over. If you talk to Vijay, our good friend from Paytm, he says, well, we are ready to sort of take over. So, but have we, the banking system works on one 4-letter word, which is called trust. And that you cannot, there's no compromise on that. So you cannot allow that word to be dealt with in many manners. So I think these are aspects. Governance means that take a deep dive, look at all the aspects, create the right kind of governance structures to make these banks future-proof, and also looking at it from a risk perspective, but also be aligned to the changes in the marketplace.
Thank you, Mr. Mehta. I have to bring Mr. Rai in because he seemed to agree with few things. He was smiling, but he was also seemed to be disagreeing with few things. Mr. Rai, where do we draw the line between public interest championed by the state and legitimate private interest? And then I'm going to bring in Mr. Jayakumar. Over to you, Mr. Rai.
I think Mr. Jayakumar will be a better candidate to discuss about it because he has seen both the worlds, both private sector and public sector, and he's the only person who has done wore both the hats. But anyway, I think all the right points made by Mr. Sunil Mehta. And the board and board wisdom has become all the more important because these are very, very critical years for the Indian banking system. We mentioned about the resilience of the banking system and all the good things done. But the next 2-3 years are going to be very critical for the banking system because as the economy is growing, where public sector banks are losing heavy market share and the private sector is growing at the cost of public sector banks, the right kind of board governance and direction and the technology adoption are going to be the buzzwords and very important. Now, what kind of direction setting board is going to do for the organization is going to be very important. So we need all the wisdom of the board to guide the bank management at this point of time. And a differentiation between the board governance and the guidance of the board and actual running of the bank has to happen. Actually, I practically run the business of the bank. Now, I also can't chair the board and set the directions, the policy and all that, because this is a conflict of interest, because my thought process may dominate the whole board. So that is the very purpose why we are trying to split these roles, actually. So I can't agree less with Mr. Sunil Mehta on the composition of the board and all that. And I'm very sure the government and regulators are seized of these issues, and we are continuously discussing, and hopefully the thought process which started with the appointment of chairmen are the right thoughts, and hopefully as we go forward these things will stabilize and will come back. So I think next 2-3 years are going to be very, very critical, and I think the board governance and the wisdom of the board are going to be very important.
Thank you, Mr. Rai. Mr. Jayakumar, would you like to weigh in? You're on mute, sir.
Okay, sorry. So let me go back a little bit to the time when I joined Bank of Baroda in 2015. In the first board meeting, we realized that none of us had met each other any time before. None of us had any common background. We did not have a common language. Each of them was appointed by different sets of people, so to say. So first thing was to get the board to work cohesively. So I think we had Ravi Venkatesan, who was then the chairman of the board. And after discussion, we got Damodaran to guide the board and take them through a program as to why and how a board should function, particularly when the board was thinking its principal reason was to object to the CEO, to show its independence and so on and so forth. How do we align the interest of the CEO and the interest of the board? The second thing was that there were enormous amount of gap in the board. We did not have enough talent. And so with the consent of the other board members, we agreed we would invite few people to the board who are not actually technically board members, they're not appointed, but we would treat them as such, and their views would count as much. And so we augmented the board with people from outside who came and joined us from technology, from human resources, and so on. And that was useful for that purpose. But you cannot always run the business in this manner. You need one of the things we noticed, and it can be empirically be established, is that the shareholder elected board members are often better, so to say, than the nominated board members. And so in organizations like State Bank of India, where there are a larger number of external shareholder appointed directors, because that's done by the private sector, so to say, they appoint, the government does not vote in those resolutions. That was also, I think, quite useful. So in summary, you probably could act under certain circumstances, but it does not always work. And the last point of this board is the rules itself. Supposing I were in the SBI board, hypothetically, I would not be able to participate or join any other company in which SBI had some kind of a client relationship. Plus, there is a rule that if I own more than 500,000 rupees worth of share in any company, I would be deemed to have significant interest, and either I can have the 500,000 rupees worth of share, or the company or the bank cannot lend to that institution. The 500,000 was fixed in 1937 or 39, when it must have been a fairly sizable amount. So the point I'm trying to say is that the rules have also got to be changed. Elsewhere in the board positions, if there is a conflict of interest, the board member, kind of abstains from the decision. It's not that you create a situation where you cannot be in two sides, and then you restrict the role too much. When you restrict your ability to work and support other companies if you join a board of a bank by virtue of the rules and regulations that have been created. So those things have also got to be changed. So in summary, I would say a greater representation of directly elected, shareholder elected directors would bring in more stability, because that's an automatic process. And the involvement of the CEO and the chairman of the board to select other members of the board so they can put together a cohesive team that can cover the gap would be very useful. And the entire thing has to be really time bound, so we don't have vacant positions.
Thank you. Well, I wish we had time to talk about LODR, about appointment of women directors, about compensation, but those are all very, very difficult issues that require more time for discussion. I want to come to Professor Yoshino, who's been again patiently listening. And I want to come to the core of our session, the title, The Future of Banking. And my question to you, Professor Yoshino, is more about green banking, because I remember you writing a very powerful article with Jeffrey Sachs a couple of years ago, where you advocated new instruments like green bonds, green banks, community-based green funds, and even a green central bank. Now, to me, this certainly sounds like the future of banking, or hopefully it should be the future of banking. Can you please elaborate on the role of financial businesses in addressing pressing environmental concerns? We've been reading a lot about COP these days in the media. What are your thoughts, Professor Yoshino?
Yes, thank you very much. Traditionally, banks are looking at risk and return. That was the traditional portfolio allocation. Now, many people said you have to pay attention to greenness or environment. So that is the third component banks has to pay attention to. However, the green bond or greenness is not clearly defined. Depending on which consulting company you will ask, they have different criteria. If that is so, the green bond and green banking may have some distortion compared to the traditional risk return portfolio. So there are two ways to achieve the optimal portfolio allocation. One is globally identical definition of greenness and evaluate each project based on the same criteria. So it does not differentiate among different credit rating agencies or consulting companies. So unified single criteria, that is very important. Then banks can follow risk and return and the third component of greenness. And that can be applied to green bond market. And that is very important. And however, nowadays, green bond is defined very, very differently. Some of the green bond is 80% green, 20% gray, 70% green, and 30% gray. So I think that the clear-cut global definition will be needed. And last one is the digital technology and banking future. I think SMEs has been always suffered and they are difficult to borrow money. However, big data analysis can allow evaluation of SME much, much better. So I think the fintech and the big data analysis should be well captured by traditional banking, which can expand their loans to startup businesses and small businesses, together with unified criteria of greenness. And that's all my point. Thank you very much.
Thank you. Thank you, Professor Yoshino. For students and researchers in finance who are wondering what can they look at to understand more about these issues, Professor Yoshino's paper with Jeffrey Sachs is called Why is Green Finance Important? It's available online. Please look it up and read it if you're interested. It's a 2019 ADB working paper. For the other issues that we just discussed, there's a wonderful book that, in fact, Dr. Preetham Singh worked on and published just last year along with Dr. Asha, Dr. Subir Verma. It's available on Amazon, Sage publication. It's called Role of Company Boards. It's a 2020 book. So please refer to it if you're interested in this. So it's wonderful, a fascinating discussion on a lot of contemporary topics. We are on time, and we are now going to be moving into the third segment, which is audience segment. We've already got a lot of interesting comments, which I'm going to repackage as questions and offer it to the panelists. Let me start with one which has been sent by Ashok Nagraj, and there's a bit of context to it. Ashok says that in India, small finance banks are helping small vendors in unsecured formats. And this is exactly where livelihood of most Indians are tied to. But the discourse is mostly about large banks, taking over small banks and the kind of assets that cannot be restructured at all. Will this have a big impact on the small banks in the country, and more importantly, on the MSME industry that will ultimately bear the brunt of this? It's a mix of comments that Ashok has blended in, but any reaction from anyone in the panel? Are we losing some very fragile?
Can I start? If it's okay.
Yes, please, Professor.
Thank you very
Yoshino,
much. I think in Japan we have two groups of banks. One is large bank and community-based banks. And community-based banks are watching MSMEs every day by walking around. And then there are two different markets in our banking system. So I think those MSMEs can be helped by local small lenders. And furthermore, big data analysis are helping them to develop. And first we started 20 years ago in Japan. Now it is applied to the Philippines. So SME sectors can be evaluated by big data analysis. And Thailand National Credit Bureau started their analyzing MSME based on those data. And that data analysis is also very good for SMEs because they have to keep their sales and how much cost they have levied every day. And that bookkeeping becomes a very good education for SME owners to think about their business. So data collection and also analysis and locally oriented small businesses can be supported by those small banks. But large banks are looking at bigger companies and regionally much more bigger. So I think two layers could be possible, and that can help MSMEs. Thank you.
Thank you. Thank you, Professor Yoshino. Very interesting perspective and a possible solution. Any Indian perspective on this issue? Anyone who wants to take a shot at it?
Yeah, I would like to come in,
please,
Dr. Ashish. See, actually, like when you look at this question, there are certain assumptions. But that's what I feel, that the large banks don't do MSME loans. This is one of the assumptions. And small finance banks do only MSME loans. I don't think these are the right assumptions because large banks also do MSME loans. If you look at our books, actually about 15 to 20% of the portfolio of the large banks also is MSME. It is a quite large chunk actually. So but then see, MSME lending traditionally has been very, very challenging for the banking system compared to the small finance banks like what Professor mentioned, the community banks, because they are close to the borrower and they have access to the information and knowledge, which generally is not captured by data, because they see the business and they see the person every day and they can take a better judgment. which is most of the MFIs and the small institutions are doing in lending to them. Whereas large banks need more authentic data to lend. And that is where the problem comes. So, but then now the India is also creating a lot of data, like, the stack what is getting created by way of GST and the turnover in the accounts and all that is helping. Now, many of the banks have digital loan processing for MSME also, where you have adequate data, and if the credit history is good, it is not difficult for MSME borrower to take a loan. Many times when you talk of MSME, we fail to differentiate between two categories of MSMEs. The MSMEs having enough data to get a loan, they don't have a problem. These are only the smaller MSMEs which don't have adequate data to get a loan, they have a problem. Now, actually, we all have to work to see, and most of the fintechs are also working around that, to see that how these smaller MSMEs, which do not have adequate data, don't fit into the large bank credit system, how to make them avail the banking, how to connect to the banking system and avail credit is something we have to work on.
Thank you. Thank you. Any other reaction to Mr. Ashok Nagaraj's concern? I think Mr. Mehta, you wanted to say something?
Yeah. I think in many ways, Rajkiran has sort of covered what I had in mind. I think because the point that was being made was that the banks are also involved in SME financing. And there is a huge ecosystem that is building on even the unsecured lending that is taking place more at the retail, at the SME level. And the private equity is funding NBFCs who are getting in, the community banks are sort of coming in. Interestingly enough, I'm part of a private equity which is sort of invested in, where they do retail financing, completely your Kirana stores. So in the portfolio, post this pandemic, I was worried that the delinquencies in these Kirana stores would have gone up. This is in, let's say, June, July, when we were looking at it. Interestingly enough, it wasn't the case. By August, they were back on track. They had, all that they did was from 25 lakhs, they reduced it to 20 lakhs just to manage the risk. So I think there are many learnings in this. There are a lot of aspects which is sort of taking place. So what they did, the only thing they did, they avoided shops that were in malls because malls were locked down. But your Kirana stores, even with the shutter half open, there was business happening. So I think this aspect, yes, there was a dislocation, a massive dislocation that has happened over the last 12, 15 months. But my view is that it is slowly coming back, and there is public sector banks, private sector banks, NBFCs, community banks, they are all going to see this. This is going to be a sector that is going to be financed.
Thank you.
Both
Mr.
secured
Jayakumar,
and unsecured.
Yeah. Can I make a comment here?
Please.
Yeah. It's like this, we also been to seminars, and we sometimes have somebody from the small finance bank speak for an hour around how well they've done unsecured loans, MSME loans, till we point out that probably our daily disbursement each day is more than what they have in the balance sheet in total. So there is a context to everything. But what I think is changing is as usual, technology. The development of supply chain, financing, and its derivatives is becoming more efficient. And the interesting thing is these are being backed by AI, so that the credit limits are no longer fixed on historical turnover, but are based on predictive turnover. And so these kind of changes are what we have to work for, rather than too much worried about small finance bank versus large finance bank, etc., etc. What happens in those models is there is an overlay of flow of money and the flow of goods. In other words, these two things are effectively calculated and proven with each other. Therefore, the credit behavior tends to be extremely good. So if you were to take a chain from a tomato grower to a tomato sauce that you're buying, there are a number of intermediaries, and the goods pass between them in a certain order. So you take that entire system and finance it, the financing risk is lower, because you're making sure that every component, every part of the chain that will make it successful is adequately funded. So these and other different models are coming in, and they probably could be one part of the answer to the overall solution of MSME financing. But again, come back, flow of information and flow of goods, if these would be aligned, you would have a good credit history.
Thank you. Ashok Nagraj, you are really lucky you got a reaction from all the panelists on your question. So congratulations for that. I want to move to the a second question, which has been asked by Brinda Ganguly. She says that during the pandemic, restructuring of loans have happened and payment of installments have practically been postponed for 2 years. Now, does this mean we have postponed the inevitable NPA problem, thereby making the balance sheets look strong for certain banks? Who's the brave soul who wants to take this question?
That is not true, Dr. Ashish. Actually, when the pandemic started, when the restructuring was given, and also the moratorium was given, you would have seen the number of predictions on the probably NPAs. And we are seeing the reality. So people tend to repay, and we don't foresee that problem. But then, yes, some percentage of the restructured book becoming NPA is factored in, but it is not big enough to disrupt the working of any bank system. We should not worry about this now. Yes, some of the NPA would have got postponed because of this moratorium and all that, but it is a very small percentage. As it is, the restructured book itself is a small percentage, because whatever account which have to slip to NPA has already slipped. Whatever can be restructured is already restructured. The numbers are already out. Numbers are well in control.
Thank you. If there is no additional thought on this, I'll move to the third question, which has come from Tanu. It's a fairly general question, but perhaps an important one. How will the bad bank work differently since it is following the same structural framework as other ARCs? Who wants to take that?
I think maybe since I'm involved in this, I'll answer that.
Please,
but maybe
go ahead.
Sunil Mehta can answer it better.
You start, then we'll bring in Mr. Mehta.
Yeah. So, see, there is a lot of difference between the earlier ARC structure and this ARC structure. To compare, the earlier ARC does it piecemeal. They don't buy the asset as a whole. They go to a bank, offer a particular price, take one piece and gradually gather, and they never get the full hold on the asset, because they generally garner 30%, 40% of the loan book only, basically. And they're not supported by enough capital also. That is another issue. And nowadays, actually, with the more cash requirement, the capital needed to acquire larger assets is also huge. And the SRs issued are nowadays not well accepted by the banks because of the provisioning requirements also. The banks generally are interested in getting all cash deals from ARCs, whereas the present NARCL is backed by government, where the SRs are backed by government. So there is a big difference between the earlier ARC and this ARC. And the debt aggregation is one of the main differentiating factor. So NARCL is not going to take any asset where there is no consensus of at least 90% of the creditors. So that, that is the level we are keeping. So that means they will have a major say on the resolution of the asset, and nobody can disrupt the decision-making process or resolution process of NARCL. So there are a lot of differences, and most of these ideas are originated from the problems what we faced, and NARCL has taken care of most of those issues which we faced earlier. So we can face new problems, but most of the old problem what we faced, we have fixed those.
Thank you. Mr. Mehta, a quick and sashakt response to that, please.
A sashakt response is that even though in sashakt we had sort of crafted a private sector resolution methodology, which would be sort of widely participated by domestic funds and global funds, this is this particular NARC is supported by the sovereign, the government of India, which is providing a guarantee. So I consider this as a special purpose vehicle with a specific objective of cleaning up the existing set of large credit, the non-performing credits that are there on the banks, particularly the large public sector banks. So the objective is to just do this one-time cleanup and then have hopefully mechanisms that will be in place that will sort of enable more ARCs. The point that I think needs to be made is that this will go through its life. It'll be successful, it'll do whatever it has to do. If it needs course corrections, better governance, I'm quite sure Rajkiran will ensure and the government will ensure that that is done, because otherwise you do not attract the right kind of talent pool to be able to deal with this. It's the board which gives the attraction, not the government of India guarantee that gives the attraction for people to join. So that is only an enabler. The second piece is that with this, the RBI has set up has come up with the new committee recommendations on the ARCs. I think there will be new ARCs, there will be a proliferation, whatever were the bad issues that were coming up in the previous ARCs will get dealt with. So you will have much more that will be happening on the whole stress asset resolution space. And I would also believe that there will be much more capital that will be available in these new ARCs, and the round robin that used to perhaps take place of the same promoter coming through and all the bad practices hopefully will come to a grinding halt.
Thank you. I have one more question which I want to take to Professor Yoshino. It's from Gauri Shankar Goldie. Can Professor Yoshino, a brief response to the question, can NPAs be handled better with rapid digitization? Can they be avoided in the very first place using big data and advanced technology?
I think digital technology is developing all over the world, and how to utilize those digital technology is very important. And one of the components is data analysis. And first, we have to practice how to collect data. And also borrowers, including MSME, they have to start keeping their data. As I mentioned, how much sales they have, how much borrowing they have, and so on. So I think those first, borrowers has to accumulate their data by themselves, then collect it, and then analyze those data set. And that is very important. And another one is MSMEs. There is a joke in Japan. They have 4 different accounts. One account is showing to tax authority. Second account is to show bankers. Third account is his own account. Fourth account is to show to his wife. So in Japan, many people do not believe SMEs accounts. So that's why you have to collect much, much bigger data. Otherwise, we will be disguised. Thank you very much.
Thank you. Thank you. I see, Professor Sinha, I have 2 minutes. Can I use that? All right. Thank you. I have a last and fourth segment, a bonus rapid fire question where you have strictly 30 seconds to respond. Gentlemen, whatever the future of banking is, which is the title of our session, it is certainly tech intensive, right? And Bill Gates famously said that banking is necessary, but banks are not. So the question to you is, how big a deal are cryptocurrencies going to be 10 years from now? 30-second response. I'm going to start with Mr. Mehta.
So I do not agree with Bill Gates, just like many other people did not agree with Bill Gates. So I think the banks will continue to be there. Technology will be an integral part of the banking system. They will absorb technology. It's not that the fintech will take over the banking system. I'm very clear about that. The second piece is on the cryptos. I think cryptos in some form or shape will be there. The question is as to, can we create a regulatory architecture to make sure that the inappropriateness of the way the crypto is being exchanged or being transferred is dealt with. I think that is an important thing for regulators to deal with.
Absolutely. I'm going to come to Mr. Jayakumar with the same question. Any reaction to Mr. Bill Gates, and where do you think cryptos are going to be 10 years from now? You're on mute, sir.
Bill Gates is probably partially correct. We're going to have technology takes many of the functions that bankers are currently doing, at least substantial portion of the functions they're currently doing. So I would expect banks to be more automated, more intuitive. I would expect bot and other forms of technology to be more actively involved with the customer. I would expect the human being to be there and play a more significant role on important issues as opposed to being consumed by the day-to-day activity. That's how I would see it. I would see the growth of digital currency issued by the central bank as a more important, as a more important and a significant development that is likely to happen. It's all very early days to stay. Technology has always surprised us. So let's see how it is going along. But we certainly are looking for a very interesting period ahead with a lot of uncertainties thrown into it.
Thank you, Mr. Jayakumar. Professor Yoshino, 30-second response.
Okay.
How will cryptos
I think,
look?
yes, paper currency can be changed to digital currency. That will be prevailed all over the world. But cryptocurrency will be very much localized for special purposes. So I do not think cryptocurrency will dominate all over the world. Thank you.
Thank you. Finally, Mr. Rajkiran Rai, who's also a patron of the Dr. Pritam Singh Foundation, a very generous, valuable, involved patron. Thank you very much. You have the last response, Mr. Rai.
Yeah, before I respond, I have come here as mark of respect to late Dr. Pritam Singh. We are all benefited by his wisdom, actually. And thanks to Dr. Asha Bhandarkar for involving me in this. And I think last 1 year we were discussing about this, and she has really put together a good program. Thank you. And coming to your question, I will go more with the RBI governor on the cryptocurrency. I think he made it very clear what he feels about cryptocurrency. And without the regulatory backup and without the government support, this cannot be a currency. That's my feeling. Like anyway, as I said, class, it is growing and it is there, but then I think at some point of time, a decision has to be taken either by the regulator or the government how to deal with the cryptocurrencies. I don't see otherwise much future for this kind of currencies. They will always remain in the speculative regime and a big risk to the system. So I resonate more with the RBI governor on crypto.
Thank you very much. It was a pleasure talking to you, gentlemen. Thank you all the delegates, participants for those questions.